Hello everyone, welcome back to my channel. If you are buying a HDB flat and would like to take out a loan, you will be given two options to take out a loan from HDB or from the bank. First of all, HDB has a lot of restrictions in terms of the eligibility to take out loan from them. You can only take out a loan from HDB if you are buying HDB flats. Okay, at least one buyer must be a Singapore citizen. Buyers must not own any private residence in Singapore or overseas. Buyers must not have previously taken 2 or more HDB loans. Buyers have not disposed of private residential property within 30 months before the loan application. And last but not least is the monthly income ceiling. It must not be exceeding 14k for families or 21k for extended families. The monthly income must not exceed 7k for singles buying a 5-room or smaller resale flat or 2-room new flat in a non-matured estate under the Single Singapore Citizen Scheme. On the other hand, bank loan is very much straightforward. The most, they will just run a credit check on the applicants and that's about it. Okay, number 2, there's a significant difference between the interest rates of a bank loan and the HDB loan. Currently, the interest rate for HDB loan is fixed at 2.6% per annum, while bank loans have lower interest rates. However, the interest rates of the bank loans fluctuate and are inconsistent. Some banks do offer a fixed interest rate, but it's usually for 2 to 3 years at best. Depending on the current SIBOR or SOR rates, a bank loan can be better or worse than HDB loans of 2.6%. Number 3, you can borrow more from HDB as compared to a bank. This is known as the loan to value limit, which means the maximum amount you can borrow based on your purchase price. For HDB loan, previously you could borrow up to 90%. However, recently there was a revised measure introduced whereby the LTV limit will drop to 85%. Do note that this new limit of 85% will only apply to new flat applications for sales exercises launched after 16 December 2021 and complete resale applications which are received by HDB from 16 December 2021 onwards. On the other hand, the loan to value limit for bank loan remains unchanged at 75%. Okay, number 4 is the difference in the down payment. If you are taking up HDB loan, you only need to pay 15% of down payment, which can be fully paid using your CPF if you have enough savings. On the other hand, you will have to fork out 25% for down payment if you choose to take out bank loan, of which at least 5% must be paid in cash. Okay, point number 5. For banks, if you are still within the lock-in period and would like to repay your loan early, the banks will usually charge you a hefty penalty of about 1.5%. This is because the bank is counting on making money off you, so they will never give out what they are owed. HDB, on the other hand, is more lax on this aspect. You can pay off your HDB loan early without any penalty to reduce the total interest you have to pay over the years. Okay, number 6. You can refinance your bank loan to enjoy the lowest interest rates in the market. The good thing about taking HDB loan, on the other hand, is if you change your mind, you can refinance it using a bank loan anytime you want. While HDB has no lock-in period and can be refinanced to a bank loan, this process is irreversible and you cannot revert your bank loan to HDB loan after that. Lastly, if you are forgetful and often find yourself making late payments, don't expect the banks to waive your penalty when you make an appeal. They are generally less forgiving when it comes to penalties and fees. HDB, on the other hand, will do its best to defer your repayments. This is the biggest appeal of a HDB loan because they are more forgiving than bank loans. Of course, this doesn't mean that you should plan on failing on your payments, as this can have other repercussions as well. Here is a side-by-side comparison and summary of these two types of housing loan available. You can also use the monthly installment calculator from CPF to help you estimate the monthly installment payable on a housing loan so that you can better plan your finances. So the multi-million dollars question is, which loan is the best? As with all matters of personal finance, the best home loan in Singapore really depends on your lifestyle. HDB loan may be more suitable if you are risk averse, don't have extra cash on hand, and has a low CPF savings because you are just getting started with your career. Though there's a higher interest rate, it's less taxing on your cash flow. Or if you wish to repay your loan early, HDB loan may be more suitable for you. But if you understand the market well and know how to refinance your bank loan instead of lower interest rates, a bank loan could ultimately be cheaper. However, this requires active monitoring of the interest rates in the market. Let me know in the comment box below on what are the type of loans you are taking for your HDB flat. Meanwhile, if you like this video, please click on the like button. See you in my next video. Bye!